everybody. Welcome to another Mortgage Minute, the week of June 22nd. It's a Wednesday today. And I'm here, as always, with Brian Dewald of the Dewald & Associates, Fairway Independent Mortgage. So, Brian, as always, great to have you here.
Thanks, buddy. Appreciate you having me again. This is fun.
Are you feeling bruised and battered after the week or two we've had in the mortgage world?
It's just, it's been a great, the whole year.
You're still smiling.
Yeah, I mean, it could be worse, right? I can walk. So I'm not getting beat up too badly, luckily.
Well, the reason we're doing this, we say it every week. I mean, knowledge is power, and then obviously what you do with that knowledge is power, implementation of that knowledge. But honestly, the reason to stay in touch with what's going on is to not be misled by headlines, to really have a good sense for, if you're thinking about a mortgage, if you're thinking about buying a home, if you're thinking about refinance, whatever the case is, you may not be refinancing with these rates, but nonetheless, it would be foolish to, be making a move on your, potentially your largest asset without knowing really what's going on. And so, Brian, there was a lot of action with the Fed. Is that where you want to start with this today?
Yeah, let's chat about that a little bit. So when we left off last week, we were talking about, potential Fed movement. We knew there was going to be some sort of movement. Our chat last week was the day of, so we didn't really know what that was going to look like at the time. Yeah. Later that day, came out, the Fed had raised their federal funds rate 75 basis points, which is an increase in 0.75 of a point.
We haven't seen that kind of a rate change since 1994, I believe.
Or I believe was the last time we saw it go up that much. Yep.
Things were so bad in 1994, I just up and left to Russia. That's when I actually moved to Russia. I had no interest in the mortgage world or the financial world. I moved there to serve a mission, but that's another story. Yeah. But I don't remember how that impacted anything. And I know you weren't in the mortgage world then either. But
I was still in high school. I have no clue.
It's been a while. So yeah.
It's been a while. The good news in terms of the mortgage world, when and this is relatively common, oftentimes, more times than not, when the Fed raises rates, we see an improvement in mortgage rates. It's not been so much that this year, but the good news in relation to last week's hike was that the anticipation was a 50 basis point increase, and we got a full 0.75 of a point increase. Normally when that happens, bonds, particularly mortgage bonds, get a rally going, and we've since seen not a sharp decline, but some improvements in mortgage rates, which is very welcomed based on how everything else has gone this year. So it's been a good little rally since that meeting last Wednesday.
We say it every week, but if you're looking to find out what the rates really are for you, first of all, the best thing to do is talk to a mortgage professional because it depends on so many different things. But if you're just curious, got to know, you want kind of an idea of what the rates are doing right now, you might want to go to freddiemac.com. That's the website you recommend. Is that right, Brian?
Yeah, that's a good one because they're not selling anything, right? There's no bias there. It's just giving you an average. It's a little outdated. They post every Thursday, so it could be a little outdated, just for the record. But it's a great site.
Okay, fair enough. And again, it's just for people's if your curiosity is piqued. Hey, what are rates doing? We can't quote a rate on here because there's just too many factors that would change what your rate might be versus my rate, so on and so forth. Now, what else is going on, Brian? You and I talked actually earlier this week about some things that are creative that we've come up with potentially to help sellers, in this case, get homes sold by offering rate buy downs to buyers.
Yeah. So there's this cute little new tagline that I've seen quite a bit lately, and it's marry your house and date your mortgage, right? So kind of twofold. When we say date mortgage, what we're referring to is potentially refinancing down the road, right? 12, 18, 24 months from now, experts in the mortgage world, follow rates and markets and stuff really specifically for full-time job, are predicting that we're going to have a downward trend here in the next year or two. So that's what we mean by date your mortgage. The other thing that we've seen quite a bit of lately is the potential for seller to help cover some closing costs. This works out quite a bit better in most scenarios, and I'm happy to look at specifics, but I just ran through one with a gentleman who's put an offer in today. The asking price is $675. He wanted to offer $660. So I said, time out. Let's look at this another way. Let's look at $675 and ask for 2%, which is $13,000 or whatever it is, in seller paid closing costs. he comes in about $5,000 less out of pocket by doing it that way, and his payment's about $40 a month less. So it's a good combination where we can reduce the amount of cash you're spending, increase how much principal you're paying over a 5-year term, certainly pay less interest. We're going to end up with a lower interest rate by almost a point for him. And it's just a good win-win, in my opinion.
Yeah, that's awesome. And again, that can also be a better way to tackle a price reduction if you're a seller, because offering to buy down rates to make them feel like what people were used to, maybe when they got pre-approved earlier, within the last month or two, and then rates adjusted so much on them, they might be able to take that and actually get a better term for, their 30 years that they're buying their house, and come out basically smelling like a rose and having it be the same. Rather than doing a $15,000 price reduction, offer $15,000. That seems crazy because a couple months ago we weren't doing this and things were going the opposite direction. We got to deal with it. So offer maybe that as an incentive to a buyer that you'd pay down their rate, and it doesn't cost you anything different as a seller if you're going to reduce your price anyway. Instead, offer an incentive like that. So I think that's a creative way and a very legitimate way to help both parties and make it a win-win, like you said.
Agreed.
Very good. Anything else we need to cover this week, Brian?
I think that's it. I'll have some more stuff for you next week, but that's a lot for this week, I feel like. So good stuff.
Fair enough. Yeah, a lot to digest. And again, the whole point is make sure you contact Brian. Make sure you contact your mortgage professional that you trust, and that Brian can lead you through these things. He can talk specifically about your situation. Obviously, contact myself, and we can talk about what this looks like if you're a buyer or a seller on the real estate side of things. And as always, of course, we're also encouraging you to subscribe to the channel. Make sure you stay connected for all these updates. We do them once a week. And then there's also a real estate market update that I do monthly for the area. So you want to stay in tune as things are changing and shifting and maybe feeling a little uncertain. You're getting battered by the headlines. So that's what we're here for. All right, Brian, I appreciate you. And as always, we'll talk next week.
Thanks for having me. Great to see you.
All right, buddy. I'll see you.
All right, bye-bye.